Well, I'm excited. We have got Brian Wang coming on tonight to help us with Good News Wednesday. What is the day anyway? Good News Wednesday. Brian, thrilled to have you aboard.
Thrilled to be here. A lot of good news.
A lot of good news. Oh my gosh, we did it again. What is going on with the market? That's what we're going to talk about today, because they've already got Larry's opinion, and they got Nicholas's opinion, and they got Bradford's opinion and Metz's, but Lutz's opinion, everybody's opinion. But now we'll get yours too. I'm really going to be excited to hear what you think in the heck is going on here. Well, let me start with this. AJ says, just a gentle reminder. Elon said in April, we've updated our future vehicle lineup to accelerate the launch of new models. We expect it to be more like the early 2025, if not late this year, where in July, we will see leaks of prototypes several months before the vehicle launch. It's virtually impossible to do road testing without someone somewhere taking pictures. That suggests that we are at most a few months away from leaks of the new models. No doubt this is a topic which will reoccur in this second quarter call in 3 weeks. People will be asking about these 3 new cars. Tesla will likely keep comments very brief to avoid any Osborning. However, the CyberCab, this is now me talking, not AJ, the CyberCab, the Gen 2.5, and the Juniper are all due in late 24 or early 25. That's just 6 months. This has to be part of the run-up, don't you think?
I think the fact that energy came through, I think it's trying to change people's minds that the other stuff will come through as well. The cars will come through, and that the AI FSD will come through as well. I think it's shifted the belief back to Tesla and Elon can execute.
And so we always think of markets. I know you're a big studier of the markets because you are a scientist after all, and scientists love to dig into those numbers. And we know that the markets typically are looking 6 months out. Mm-hmm. So 3 months ago, they probably weren't paying a lot of attention to Elon Musk's statement about these cars that are coming out at the end of the year or early next year. But now we are exactly 6 months out. And I think it's a very high likelihood that the 2.5 makes it by the end of the year, maybe slides into early January. And then the Juniper, I keep hoping it'll come out sooner because I think it's being Osborned right now by the Model 3 and the Cybertruck. So what do you think? Do you think that much of this increase over the last few days had anything to do with us now being 6 months away from those 3 cars?
I don't think the analysts, most of the funds are that precisely calculating. I think it was more a matter of that they just didn't believe it. That so much, just like some of us on the bull side, where execution hasn't been quite on to point. Yes, they're doing some things, but in terms of totally blowing away expectations, that kind of Tesla's totally killing it thing had basically been that 2 years ago, right? Model 3 was great. The getting that launched in China was handled perfectly. But what was really different on Tuesday morning was that Tesla Energy went 132% from Q1 to Q2. So utterly blowing away all the bulls. Everyone is kind of like the Tesla magic is back, right? And that there were already people saying Tesla's too beaten down. So already that was a story that was flipping. But the turnaround from it's too beaten down to and it's now going to start surprising on the upside. That even if the FSD is coming out there, so it's 12.4.2 is releasing, so people are seeing it's happening a couple months slow. The aim small, miss small. Aim for April, May, and then I hit it in June, July. Mm-hmm. So it's not like I'm aiming for next year, but they're aiming for the cars for Q1 next year. Maybe it comes in early, maybe it comes in late, but the miss plus minus is only 3%, I think. 3 months.
3 months. Right.
So I think that is what's changing things.
All right, so let's talk about energy because definitely this is now becoming part of the conversation. I want to do a little bit of a little history here. So back in November of 2022, you were part of the team that wrote the Elon Musk mission, one of the authors. And one of the things that you and I were talking a ton about was the energy proposition. In fact, the book's big breaking news, the thing that we were holding back, making a decision about what day we were going to break the book, was because we were going to break Lathrop. Nobody was talking about Lathrop. We were basically saying, hey, there's this facility in Lathrop that's going to matter.
Right.
So we broke that news back in November of 2022. Then you and I did all kinds. Oh, we had so many programs that we did where we talked about, how many bajillions of gigawatt hours these plants were going to start producing because they were going to pop up everywhere. But to your point, it's been slower than expected. Now all this, and also everybody said, we agreed that the street wasn't going to pay any attention until it was around 10%.
Right.
So Tuesday, it's now more than 10%.
Right.
It's
Probably 15%.
15%.
Maybe 20.
Right.
Yeah.
It's a big deal. We have a second plant under construction. The plant in Lathrop is running 70–80% of capacity. The numbers are starting to become significant. So your thesis, I think, right now is that this is maybe one of the major reasons that we saw this big run up is actually the energy part of it.
Right. That I assume that the analysts have some confidence, and that when it goes over 10%, they say, okay, I got to dig in and do the work. They do the work and they realize not only is it 15 to 20% this quarter, but that it can be, if I'm negative about the car stuff, then energy could be 60%, 80%, even equal to cars next year. And the growth on it will be easier. The capital investment is like $400 million per plant instead of like $10 billion all in for a full up car plant. And they build it a lot faster. It was built in a old Target store in Lathrop. So these are tiny buildings and then easy to expand. Like 2 lines there, they could, back when we popped up the tent for the Mall 3, they could do that and start, if there was a need for energy, they could, totally just make that go crazy. So easy to expand it. And if the bottlenecks clearly have been broadly removed. Otherwise, you don't go from like 4 to 9.4, right? You don't go like up 1.3 in 1 quarter. And I don't think that you got all of your gain in 3 months. It isn't like, oh, I'm scaling up now. Everything happened that 3 months. Now we're flat again. It's like you're gonna keep going for a while. Right. So I think that getting to 12 gigawatts in a quarter is totally doable, and I would not be surprised if you get to 16, even more by the end of Q4.
Right.
Even without the Shanghai factory, I think just Lathrop and Power Walls, which out of Nevada.
Right. Right. Yeah, and the other thing that we talked about in the book, I believe it was in the book. If it wasn't, it was shortly after on this program. We in fact, even Warren Redlick was involved in this conversation because Warren kept doing his back of the napkin math and saying, well, it'll be, a $1 trillion business by the end of the decade. And I said, Warren, the prices are going to come down. The cost of these units are going to come down. You've got to take that into consideration. And so we put that into our numbers and we said, look, and so now, but everybody's surprised because they don't listen to us.
Yeah, that's right.
So the price is coming down radically right now.
Right, the price is coming down, but the energy markets are huge.
Right.
And unlike the cars where it could be the prices come down, the delay in the volume TAM increasing, I think there'll be less delay on the energy side. Like if the prices come down in half, like they have for the Megapack, then they're displacing the natural gas peaker plant, other stuff like that. So then there's a huge availability, just like solar, when it came down 10 times the price, it went up like 100 times, 1,000 times in volume,
Right.
right? So long as you have your margin there and the increases, will more than offset the drop in price.
Right.
So which goes to that the gigawatts will keep increasing.
Yeah. So I have to admit that in the very beginning, when I saw the prices coming down this early, I thought, why is Tesla even doing that? They've got to be supply constrained. And so you would think that you could just grab some margins. But then I thought about it for about 5 minutes more. Now, I have been a buyer of large amounts of raw materials, and I have been a seller of large amounts of product to people, to the U.S. Army, to the U.S. government, to Target and Kmart, and et cetera. And when you're in that situation and you go in and the buyer says, but your raw material cost is in half. It's not like you can say, well, too bad, I'm taking the profit. These guys go, well, then we'll wait, or we'll try the other guy, or we'll consider something else. And so even though there's a huge TAM and they're supply constrained, I think what happens is these are buyers that they want to have a relationship with for the next 50 years. And so they're adjusting their pricing on the fly in order to be, based on what their raw material costs are.
And the thing is, for them, they are also buyers of batteries and stuff, and say, no, okay, yeah, I got to pass it on through because I would expect it.
Yeah,
I'm gonna behave the same way. So then they know that volume will increase, just like they will make more cars, make more other things when the prices come down.
Yeah,
and hopefully the availability of cars, like when we get down to that 25K car, when the average ICE car is up at 50K, the differential will be too much. It'd be like, I'm just a fool for not buying that cheaper car. I could buy a used car at 10K, or I could buy a completely new EV at 25K. The flip to it's the obvious choice, is there. Just like for products like, I don't know, big screen TVs, phones, cell phones, like it's just the price signal becomes unambiguous.
exactly. So Bradford Ferguson says that the current run-up is at least partially due to the fact that we're now at a bottom for Tesla, bottom in terms of their production, bottom in terms of their sales, and that now people expect this to start going up from the very bottom. And he says that if you look over history, companies that are at that bottom, the PE goes up dramatically when they're at the bottom. So having an 80 or a 90 or 100 PE for Tesla right now shouldn't be shocking, because the next wave is now being priced in. And Larry, by the way, Larry Goldberg thought that was a brilliant analysis by Bradford Ferguson. What do you think?
Yeah. So the stock wasn't beaten down as much as it could have been if it was purely based on that quarterly number. If people didn't think that it's bad, but it's temporary, some kind of temporary, right? And you're still making money, still profitable, then it's going to come back. So thus, it didn't go down as far as just a pure numbers thing would have been, because there is more than just this one quarter, one year. It's like that discounted cash flow over 10 years that they said, okay, it's going to come back in some form. Although there still negativity in terms of like how much it could grow is still in the show me phase, because there's still people with 3 million cars out in 2030 kind of land.
Right. So I've been saying, before as the first day, let's call it like Friday night and over the weekend, I'm saying, okay, this is FOMO. FOMO for 8.8 primarily. Ryan and others agree that it's FOMO, that everybody's got their eyeballs wanting to know what's going to happen on 8.8. They don't want to be left behind. And the whole situation between now and 8.8, we're going to be getting hints. We're going to be seeing we're going to be seeing 12.4.2. We're going to be maybe seeing 12.5. We might start to see some other things being said in terms of when 12.6 might be out or whatever. So as we get closer and closer to 8.8, then we're going to see more and more of this FOMO. Do you think a bunch of what's going on in the price, especially, oh, and then I said, if it keeps going up after 220, we will know that it's FOMO. Now,
I think it's FOMO for the retail investors,
right,
but also, you know, some other retail, not the ones who are of course already in, but the new ones, but also for the fund manager side, it's that their incentive is to beat the indexes, right?
right,
So then the FOMO is not just because of that, it's that they're incentivized to chase the thing, right? That if it's going up, then they say, okay, I have to be in it, especially if I think it's going to keep going. And then the other thing would be that some of them are very sophisticated, have a lot of information, have sources,
yeah,
right? So just like, you know, we may not have heard the 9.4 gigawatt hour number. That would be known within 100 employees within Tesla. Or there would be people in the supply chain who would know.
yeah,
Right. So, you know, people like Bradford Ferguson who does the work and then publishes it, but there's other Brads who are more quiet,
yes,
just managing their thing, right? So they would do the work and they would say, oh, I see this is going to happen. So thus I can comfortably lay down several $100 million in calls
yeah,
ordered, and there has been call order flow happening.
huge,
Huge call order flow.
yes, right,
Right. So that is someone who's making that bet would try to eliminate all um, guessing.
yeah,
Right. They would say, okay, I'm going to make for sure. So, you know, as we lead up to 8.8, there is information out there from people who are willing to do the work and have sources to know what's really happening at 8.8, what's already going to happen on the earnings call, what already is going to happen on possible deals and other things. Like if a China company is actually thinking about doing it,
right,
doing a licensing deal, right? What, a team of like 12 people within the company might know. You have the founder and then some other people on the team, right?
yeah.
So this information is getting out there, and people willing to make billions of dollars on it would pay, hey, $10 million to get that piece of information to me. You know, so you know, not perfect markets. It's people are working on it with better information than we have,
Sure.
and that goes to the whole theory of why people are following the price action, because they're saying when they do make the move, it's indicating in the price action, and that it's not irrational price action per se.
Right. Right. Well, so one thing that it just occurred to me a little bit is a bunch of fund managers and a bunch of analysts just missed maybe, I guess, the biggest run in history. This
With NVIDIA.
It was the biggest run in history.
Right.
$2 trillion in like 6 months or something. I
Right.
mean, holy mackerel. So could those folks be sitting there going, I don't want to miss the next one. I'm going to look like an idiot. I just missed this one. How can I possibly miss the next one? And at least let's just say that there's a few smart guys out like they're like Ron Barron and Kathy Woods and others who are not just little YouTubers like us. They're well-known, sophisticated folks out there that people trust more than us. That they might go, well, this looks like it could be the biggest deal ever, beating NVIDIA. I better get on board.
Yeah. So Traveling Trader is a YouTuber who, you know, he has a few 100,000 people following him, stuff like that. And he was early in, you know, as Tesla was going to 140 and stuff like that. He said, okay, got to buy that. He ran the NVIDIA one all the way up. And then he started saying, okay, he needed to start rotating out of NVIDIA. So there is a rotation out of NVIDIA, as we see a drop from like 1250, you know, 135 down to 120 or something like that. And NVIDIA is probably going to go back up again, but there is a bit of a rotation out in order to redeploy. And Tesla was one of the ones. It's like, which one has not had its AI run, right? Of the big companies. They do recognize they have good technology. It's not like Tesla and Elon are no good, right? So he is indicating that. He said that to many people. It's not a secret. You know, anyone who's doing some research would say, okay, yeah, that's a reasonable case that would happen. And there's, I think, other professionals who think like that.
Yeah.
Who think that, okay, I gotta it's run up. It's not like, okay, I can keep running it higher and higher. The risk goes up as the price goes up, and then what's on a discount, and clearly Tesla's been on discount. So some of the Tesla on the discount, it shouldn't be beaten out so much. We're past certain Delaware things. Like it's still kind of hanging out there, but not really. So so that shift, I think, is happening.
So some of those very same smart people, Kathy Wood, Narayan, others, who are, have been talking about Optimus. I mean, have been talking about the robotaxi for quite a long time and putting numbers on it. But they're not putting anything out there for Optimus yet. It drives me nuts. Same book, Elon Musk Mission, which we both helped to put together. We talked about this is November of 2022. We're putting out numbers. We're giving recommendations and suggestions. 2 months, 3 months after that, I have Scott Walter on my channel, and he and I are trying to figure out what we think the cost will be. And Scott's saying $7,000 to $10,000. That was on my channel first. That was right here. We're so far ahead on this stuff. And so now we know it's going to be 10,000 in scale. We know that it's going to rent first. So why, if we now know it's going to be 10,000 at scale, it's going to rent probably going to be close to the number. He seems to think that Cern Basher was correct at 60,000, 70,000 a year, which is what I said 12 months ago. You can look this up. People can go back to my channel and look at the videos that Scott and I did. I said it'll be probably about $6,000 or $7,000 a month. So if that's happening and we start to have some numbers for it, and Elon says he thinks he's going to make 100 million of them in 2030, wouldn't that cause the stock? I mean, if anybody that actually believes that, I just don't understand why.
I think that they can build a position, but in terms of like the risk management thing. So the guy who's running a $400 million fund in Montreal, who's been on Herbert's channel, he was saying, yeah, that they can see, that scenario can happen, but that they can't allocate more than a 1%, 2%, or whatever amount probability to it until there's more information. Yeah. And then even if it does do it, in this case, because the potential is so huge, just like that, they would have to do it as it unfolds. Like right now, NVIDIA, the case could be made that it could, it's already been producing, kicking off all kinds of cash, right. And then they're having doubts about how long it can keep going, yeah. Right? So they don't want to, because just based upon pure cash generated, like $100 billion, like that, and then doing a multiple of that, their 30 multiple is low based on the fact that they're still doubling every year, right? It should be like 100, right? But so they're producing the cash, producing the growth, and then they still can't pull the trigger on it because, well, it'd be $6 trillion, it's like, versus $3 trillion or $9 trillion. That's what the number should be. They have to let it stair step up, like deliver every quarter. They have their position, but they don't like overcommit to it because they won't get wiped out or whatever their thing is.
Okay, so let me, this is going to be a little bit of a rabbit hole. This is not what we do on this channel, but I know a lot of the listeners to this channel are also invested in NVIDIA. Like me, I think that they're investing in NVIDIA. I'm not invested in NVIDIA, and the reason I'm not is because I don't know enough about it. I don't know enough about the industry, but you and I have talked about this on our other channel, on the Next Big Future, your channel, Next Big Future. And so I know that you know this stuff backwards, forwards, and inside out. So I've asked you this before, but I want to ask it a different way this time, because somebody said the other day, and it's made sense to me, if we don't start to see some kind of return on investment for Microsoft, for Google, for Meta, et cetera, go on down the line, for these people that are putting 10, 20, $50 billion a year into these chips, if they don't start showing some return on investment, some return, what they call ROIC, return on investment, invested capital, if we don't start seeing some big numbers, they can't continue to buy these kind of chips because the stockholders will eventually revolt.
Possibly true, but it's far further down the line than people would think. Because how much did Meta, Facebook put into, and still putting into metaverse, like $20 billion a year? Absolutely nothing, right? Getting absolutely nothing back.
But their stock went down like 30% last year.
After a few years, right? And then they went and cut back.
Yeah.
So if they have more cash, throwing up more cash than those people think. The other thing would be that they are getting a return on it, right? OpenAI made a few $1 billion. Microsoft putting it into their products, like Office and other things. Meta, Facebook putting it a search bar, with a query, keeping people on the Instagram, Facebook, and stuff, and so hitting more ads and doing more stuff. So they are getting returns. NVIDIA in the last quarterly shareholders presentation, or one of Jensen's presentations, said that the H200 new chip doing 24,000 tokens, he made a calculation that when you run the open source Meta Llama 3 on that, and gave whatever assumptions there are, but basically that you run that and use it on H200, that you will get 7 times the money over 4 years. That you put in $1, getting your H200, setting up the data center, paying for the energy, paying for the people, you will get $7 back over 4 years. So, is it like $2 in the first year, $2 in the second year, $2 in the third year, and then $1? I don't know what the distribution is, but they give analysis of that is profitable, which Altimeter Capital, Brad Gersten, Bill Gurley, they were 6 months ago, they were saying Google makes 15 times on their search. So you put in $1 to provide the service, you get $15 back, right? Over 4 years or whatever, whatever assumptions are. Again, all the assumptions are not published. It'd be like 50 pages of like, what am I doing here?
Right.
So, but it's profitable. But then they compared it to search at the time, and it was like, okay, I put in $10 and then I only get back 3. So they're losing money, right? And it was a broad range. But now the NVIDIA thing is profitable, but the latest chip from Grok may not be profitable. Other things might be profitable, but basically they have line of sight to profitability, starting for some this quarter, and then depending on how they do it, they can get more. So profitability is going to happen. Thus, investment will continue. Competition, other things like who knows, but it is possible to be profitable, and so they would always assume they'd be the ones to make their plans work, and they'd be the one profitable.
Let me give you one more shot at what might have caused the stock to go up that people aren't talking about, and that is the Biden meltdown in the debate. Pretty much, well, let's say increasing the betting odds, increasing everything that you look at in terms of the likelihood of a Trump victory in the fall, and that multiple analysts are saying that Trump victory would be good for Tesla, even if it might be bad for EVs. It'll be good for Tesla because, of course, the current administration ignores Tesla and Elon, and Trump has already made very kind comments about both Trump and Musk and Tesla. So, do you think that again, at the same time, all this is happening at the same time, do you think there's any chance that part of the run-up is due to that change of administrations coming up?
I think definitely, because on the night of the debate, futures for the indexes went up. So your only major news was the fact that that debate was happening, and then Biden was blowing up, and the odds of Trump were increasing, and that improved the futures. Then everything starts moving again. Other reasons start happening, but the proximate indication was a Trump victory is positive for Tesla and for the indexes. So yes, that would be the case.
All right. Okay. Well, let's go on to the general business situation right now. The markets were really sanguine today. They were not, they're kind of sideways today, even with this lackluster job report, although bond yields crashed again after the big run up over the weekend, then they've been coming down ever since, or I guess the end of last week. And then they came down. No, they were still going up on Monday. Then they came down yesterday and today. They're not back to where they were. So are we headed into a soft landing, a recession? What do you think's going to happen in the next the next 3 months or 6 months? What do you think's going to happen here?
Heading into recession would mean that I think that I would see you would have to take a financial crisis, that basically one of the banks blows up, and they're under strain still.
Yep.
And so a bank blows up, a country currency, some systems break, and the longer that we have the high rates, the more chance of that happening is. It seems like we're getting lucky and we're getting through it, that there was enough strength there to get us through it. Although there's stuff like, people's personal finances starting to break,
right?
More people getting repoed cars, more other problems on affordability, more bankruptcies, more credit card issues. So it's not like a clean 3 months, nothing can happen. But the odds are, if it's just 3 months, we could get lucky that if we start, but we need to start relieving soon. Like the fact that that Jerome Powell, said again, yes, it looks like we're back to 2.6%. It looks like inflation's back on a downward trend. Want to take more time to figure it out. This, I think, is the wrong move. That they should be saying that, we've kept it too high too long, putting too much on the stress system. Like we had Silicon Valley Bank, First Republic, other banks blew up, right? Because of their inflation delay transitory thing, the way they handled it, like start too late, ending too late. I think there's no need to roll the dice on this thing. So anyway, so the question of is there I'm an optimist. I think that hopefully we get through. But if things start to break, cutting things quickly, 1% cut or something like that, again, it'll be like too little, too late. They'll be chasing it again. That if their actions should have been before, start raising rates earlier, and they did not, and then they end up chasing it and bumping at 5%. If you're gonna, it starts too late, and then you drop 3%, again, you've screwed up, right? You have to do some bailout thing, quantitative easing. It's a big mess when you're behind this thing. And I think that the risks are waiting too long.
So I have to admit, I promised my listeners that I would check on the commodities and find out what the heck happened this morning, because the only thing besides bonds being up was that the precious metals and copper were all three up strongly this morning. Did you happen to see anything, or was there anything that struck you about commodities today?
I haven't been looking at it. I would presume what could move that would be China or some other big country doing particularly not as bad as people feared, and then also the slow pickup, the pickup in AI data center tech and other things, like something moving that thing. So I'm not seeing specifically what that might be.
We did see that the oil numbers have been going up, even though the most recent reports on oil were that there was more reserves or more supply than they thought in the United States. But maybe somebody knew something that we didn't, as you were pointing out earlier, because the numbers dropped dramatically today, like 12 million barrels. So this was a big shock to the system. With that kind of a drop, and it was across the board, big drop in oil, big drop in gasoline, and big drop in derivatives. The other
futures.
Yeah, all the futures across the board on all the fossil fuels, except for natural gas. All the rest of them, much lower supplies than people thought going into summer. So we could be seeing some strain next week, especially with a big hurricane season speculated.
Well, things like weather, have been excessively hot, so people could have been running their air conditioners more. Um, industries may be doing other things. Vacation activity probably was coming in strong. So
Right.
I think various that kind of activity, I think could might be able to explain things.
Yeah. All right. Well, so we have 1 day left in this week, and it'll be probably a very lightly traded day, and with everybody being on vacation. Do you think that we have the employment numbers coming in? Everything indicates every single precursor to Friday would suggest that labor is now in trouble. I mean, that we've got lower numbers from ADP than expected today. We have the numbers coming in from the manufacturing side, again, showing lower, horrible numbers on the manufacturing side. Transportation is down, housing starts. I mean, you just go across the board. The only thing that's even doing halfway decent are services. And even there, we're seeing restaurants under some strain. So do you think there's any possibility of a surprise on Friday?
Positive or negative. Yeah, that goes to the fact that I don't like the fact that they're not being more proactive about it. That they're waiting to the last minute to do the to do the actions. I guess them being concerned about inflation reigniting is a valid concern, but that they could take 0.5% or whatever off the table and then see what happens.
Mhm.
I think that would be the better experiment to do than just. I don't think holding in place is the right choice. As for jobs, yeah, I think it's getting worse. Just my looking around that people eating out less, that will hit services. The overall belt tightening that everyone's doing will reduce jobs. That the more people, and the belt tightening is also related to the whole interest rate thing. That interest payments are being up. The inflation numbers that we have do not include interest payments. In that was a change made since sometime between the 70s. 86, right?
Yeah.
So all these numbers, when you're comparing it to the 70s or the 80s, something like that, are off because you purposely changed the numbers.
Yes.
And that means things are worse and people feel it worse. The fact that they're living paycheck to paycheck or behind paycheck to paycheck. I see articles talking about borrowing money to do basic vacation activity, right? It's like the wrong thing to do that they're forcing people into. And so I think that starting to ease it instead of like doing something crazy chasing it is what should be done. So I'm concerned about the numbers. The numbers are a bit faked, but they need to fix that up.
So I'm still sitting on a 30% chance of recession in the third quarter. Part of that is because last year's third quarter was such a huge jump. The GDP jumped like 5.3% or something in the third quarter. That's really going to be hard to get over. The fourth quarter was a little smaller, I think around 3 point something. So that'll be easier, but still not that easy. So we could end up with a technical recession for the third and fourth quarter, which won't feel too much like a recession because maybe employment is still around 4.1, 4.2. So that's kind of my scenario over the next 6 months. But as you point out, it wouldn't take much of a slip in any one direction for all of a sudden that goes into the toilet.
Right. So, it's because the possible things going wrong look relatively small relative to the whole economy. It's basically like starting the slide down in a more major way that we don't know how the numbers play out. I don't have any advanced indicators that would give me special insight into what it is. I just have the concern that you have, that the risk of recession is too high and that they need to preemptively do some easing in order to reduce stress on the system. Yeah.
And since we've been doing this now for a long time and everybody's already gone, I'm going to whisper it again. I like recessions.
Okay.
People who watch my channel know that from time to time, I think recessions are necessary and good. They're like going to the doctor and having the infection cleaned out. From time to time, you just need to do that because there are people that are doing the wrong jobs and there are companies that shouldn't be in business. And so once in a while, you need to.
But I think we've had rolling recessions.
Yes,
right? Like
you're right.
Different industries have been having the recessions. So things that being put out, like,
manufacturing,
Tesla,
transportation, housing,
tech
are all in recession. Okay.
Right. And tech has been in recession too. So and then also we had, a recession like a year and a half, 2 years ago that basically, it was, 2 negative quarters. They try to like again redefine it and stuff like that. So I think we've had really 2 recessions in the last 4 years, right? The COVID recession, brief, sharp, and then another one. So so we've had some, and then the whole rolling recession thing.
Yeah.
So in terms of stuff being cleaned out, tech is totally retrenched. I don't see where the excesses are.
Yeah.
Right. Because they're just they're faking the numbers and indicators. So I think it's not like we've had 10 years or 8 years of solid boom and everything's going great, and then we have a bunch of excesses, right? I think people have been cutting back plenty. And so I don't think that the cleansing needs to happen. And I think that we could have 2-3 years of a boom and then have a recession. Yeah. But I don't think it's needed. Yeah.
All right, let's take a quick look at the numbers. This is your first time on this show, obviously not on this show, but on the good news broadcast each night. The last thing we do, Brian, is we go through the numbers. So today we have Tesla up $15.13 at 246.39, and in the after hours up another $2.
Yay!
So we might be looking at 260 on Friday. It wouldn't shock me. Wouldn't shock me if we had a blowout either, and a lot of profit taking. But we have a shot at 260. I really truly believe if we hit 260, we will see some retrenchment and certainly a lot of resistance to going over 260. And I'm not ready to make my third call on 300. I don't know if you know, Brian, my first call on 300, I hit it on the day. It was only 299.12. So some of my detractor says we didn't actually get to 300, but I called it weeks in advance that we'd be 300, and I even picked the day, and it was the day. So then the second time I missed it entirely. I said it would be 300 by the end of last year. That obviously didn't happen. So I'm not quite ready to call my next 300, although I did say this morning that I thought we probably would be at 300 by 8.8.
Right. I'm more positive that we can get to 300 by 8.8 or on or just shortly thereafter. Right. And then we have to get there at some point if we're going to get to 700, like you're saying, by the end of the year. Yeah.
Dow Jones was down 23.90, the NASDAQ up 159, and the S&P up 28. And those percentages are: the Dow was down 0.06%, NASDAQ up 88.88, I'm sorry, and the S&P up 0.51. We have the Magnificent Seven all up except for Amazon, who was down 1.21%. NVIDIA finally turned around today, up 4.57%, making up for a lot of the losses of the last week. And then the Cathie Woods were almost all up, mostly up today. So good day for the Cathie Woods. Let's go ahead and look at what really happened on those bonds. Just a second here. So the bonds down 8 basis points, 7.9 basis points. Of course, there's no pre-market today. That'll be tomorrow night. But for the day, down 8.1. Let's go ahead and see where the inversion, every day we do the inversion. We've been tracking these inversions, Brian. It's, because this inversion is supposed to predict a recession. And the real predictor is supposed to be when the inversion starts to contract again. Mm-hmm. We've been contracting all week. So let's look at them. So the 10-year was down 8.1, I'm sorry, basis points today. The 2-year was only down 3.1 basis points. So now that makes that inversion pretty close to 35 basis points. That is around where it has been all year. It went up to 50. It went down a couple of days ago to around, I think yesterday, to around 30. Now it's back up to that 35. So that's pretty much in the middle of where it's been all this year. And then the 2-month, which people don't pay as much attention to, but it's always fun to watch. That was down 1.9 today. It's at 5.359, almost exactly, like about 105 basis points. And that has been as high as about 120. It was as low as 75. So it is now back up more towards the over 100. I always think is pretty strong. So the inversion is not collapsing yet.
Okay.
Do you follow that whole inversion thing at all? Have you?
I understand it. Yeah, obviously I notice, but I don't track it on a week-to-week, day-to-day basis.
Yeah, we do it twice a day here.
Okay.
Every morning and every night. Okay, oil unchanged for the day. Wow. But Brent up 81 cents. Now that might be because do they trade it at different times? Anyway, so one of the things we watch also, Brian, that is now still $3. Okay, so $3 difference between Brent and Texas Intermediate usually means the Middle East is stable. If it goes more than that, $4, $5, usually means there's instability in the Middle East. So right now, stable in the Middle East, apparently. Maybe Israel is not going to attack Hezbollah after all.
I disagree. Israel will attack.
They
Israel
will
attack Hezbollah for sure.
Okay.
So I have friends in Israel, and basically because Hezbollah is still there and lobbing missiles in, then 53,000 some people have to evacuate out of northern Israel. Right. So it's like no one could live in Washington State and Montana because Canada was lobbing missiles into the northern United States. So it wouldn't be, well, we'll just let Canada keep doing that. No, they have to go at it. So, but the timing is they have to get control of enough control of Gaza and West Bank. So basically that is the corridors going across and then raiding in because they don't have enough people to do a full occupation thing. So the most efficient way is to put the corridors in. They have that corridors, and then they will then be able to get the reserves and go deal with Hezbollah.
Got it. I also heard they're a little short of ammo.
Yeah. There's issues. Yeah.
There's issues. Okay. So natural gas unchanged, $2.41. That's kind of in the middle of the recent range. We have got, so I'm thinking now that these things they're saying all unchanged. I think that is, now we're looking at the pre-market, which doesn't start till tomorrow night. So gold, this reflects what it was this morning, 2,369. So about 35 up on the day. Silver over $30, almost 31. Again, similar, up quite strongly on the day. And copper at $4.53, again, up strongly, but nowhere near its $5.10 that it was just a few weeks ago. We talked about that a few minutes ago. So we've got Bitcoin down 1,783, playing around with the 60,000 level again, just barely over at 60,140. I don't know anything about crypto. I report this every day, and the only thing that I report in terms of my own analysis is whether or not it's going up or down and what it might mean technically in my little pea brain technically. So I'm looking at it now being almost down to its recent lows, which is around 59,000. And I know there's some headlines about the federal government, the Fed itself, saying some things, and the federal government making some new rules.
Right.
That's all I know.
So I think we can go over that in more detail because it's a more complex topic. We have to do more of a show on that. So I think the main point is that can it become this other system enough, and it's getting into ETFs and stuff like that. So the traditional Goldman Sachs, they're making their money from it too. So they want to succeed. So there's the forces, banking and other stuff that would make it succeed. And then there is, the whole world situation where people, when they want to, expatriate funds, you do that there, there's more demand for that. And then there's the US is going bankrupt, the system's going to break thing.
Right.
So if the US breaks, and there's people who make that case, and it's a more complicated case, then in that scenario, potentially, Bitcoin could become that last currency thing standing.
Better than gold, I guess. Yeah.
Better than gold, potentially. Right. It would be a means to actually be a replacement for fiat currency. Right. So that scenario, but there's other stuff going on there that in terms of ebbs and flows and blah, blah, blah. Tom Lee, big stock investment bull, thinks that we get to 150,000 by the end of the year.
Yes.
And then Kathy Wood has their $1 million, forecast out a few years. So, but it's more complicated. We have to do more of a show to discuss.
Yeah. I'm really, I have, somebody even sent me a book. One of my commenters on YouTube sent me a book on it. I still haven't even read the book. I probably should someday just get a little more depth, but on a day-to-day basis, it's just interesting to me to watch it as a pure play in terms of what's happening numerically.
Right.
So not knowing anything about the underlying, and sometimes knowing a headline or two. So I'll throw the headlines in. But yeah, just as a pure numbers game. That's how I kind of do it on this channel. Yeah. All right. Well, that is it. We've covered everything there is to cover today. And Brian will be back again tomorrow night, because it turns that Bradford Ferguson can't make it tomorrow night. I don't know why there's nothing going on tomorrow. Why is he getting tomorrow? What the heck? Anyway, so we'll do it again tomorrow night. Thank you so much for being on.
Thank you.
To all of you out there, it's been great talking to you.
Thank you.